Hello, everyone. Welcome to Real Estate. Right now, we talk about real estate matters that matter to you. My name is Jay Izso, and we are live here from Linda Craft Team Studios here in Raleigh, North Carolina, part of the Greater Research Triangle Park. Today's show, we're talking about insurance. And so I brought him back. He's been with us before. His name is Bryce Williams with Harbor Trust, represents a number of insurance companies. And we're going to talk insurance. A lot of things. We have a lot of questions. This is a myth-busting show. I love when we do these. These myth-busting shows are a lot of fun for us. And we get to take some of the myths that people generally have all over when it comes to a particular subject or topic. And then what we do is we get a professional in and they either bust them or they say, no, it's true. And so, or maybe they go, it's a myth 50-50. So we brought Bryce Williams back. Thanks for coming back, man.
I appreciate you having me. Good morning, Jay.
Good morning. And I think before we get started into the myths, I want to just kind of get something off the table. Economy has been changing. We've had a lot of mortgage lenders on here talking about interest rates and what's going on in the housing market. How has the economy, let's say over the last 5 years, how has that affected insurance and insurance rates?
So if we're talking about homeowners, and let me just kind of focus on homeowners. Really for the past 10 years, I've only really seen rates going up and up and up. It's one where I'm kind of pessimistic every year as to whether we're going to see some relief. We just kind of hunker down, and it used to be, hey, trying to explain to a client why a rate increase is happening this year, but it seems to be the same conversation I have every year. So we just look to find ways to minimize the impact to the client and take on, make some adjustments to the policy, see what we can do. But the economy's definitely had an impact on the cost of materials and also in some areas, the severity of claims. So, we're having claims that occurred. We've got wildfires here in North Carolina in the past year, which is kind of new to us. And I swear growing up, I never really recall having hail growing up here in North Carolina, in Raleigh.
Not severe hail.
Yeah. Now we're seeing hail claims. So, it's a never changing thing. Weather's doing a crazy thing.
Sure.
Yeah.
So, I know there's people who watch the show and are going to listen to the show, and we have a lot of listeners from Western North Carolina. And of course, we had that huge hurricane Helene come through here and do a lot of damage. Those type of situations have probably a negative impact too on the insurance rates and those type of things as well, right? When you have that much damage. Yeah.
The insurance companies, they do try to segment some of that stuff into territories. Like they can have a generalized rate increase that they're going to pass across the state, but some areas will reflect it a little bit more than others. We may have more rate increase taken at the coast. We may have more rate increase taken at in the western part. Or in Charlotte specifically. I know that's happened in a couple of years. But when we hear of rate increases being approved by the Department of Insurance, doesn't mean that everybody's getting the same rate increase. It could be that certain territories are feeling it a little bit more than others.
Yeah. So, and we were talking before the show that, we have a beach place down in Carolina Beach. And we experienced a tremendous rate increase on the wind and damage insurance that we had to have, which isn't nobody else is getting that. It's just because of what our condo community faces and that type of thing. So it can be very regional or territorial.
Yeah, especially, and it gets more exasperated when carriers pull out of certain areas, like at the beach. When there are less carriers that represent the beach area, there's less carriers to bear the brunt. So when a carrier pulls out, all of a sudden you see this surge in available policyholders that need to pick up coverage. And so the remaining carriers then have to adjust and figure out how to correctly pick up all that extra business. And it may be a lot of business they weren't expecting to take on. So they get overexposed, and there's a knee-jerk reaction sometimes with some of those companies. And so, it's the coast is not as enjoyable to try to navigate as it used to be.
Well, and it's very different, than in, here in the Research Triangle Park, what the cost is of that insurance. It's very, very different. How many years have you been doing insurance?
Since 2001. Got licensed December of 2001.
So when you were 12, you got licensed. And so now you're 30 something. So So
I ran my apprenticeship underneath another guy, and that's where I got my
So you're 12, because you still look like you're 22.
The hairline's The hairline a little further back nowadays, but yeah.
Don't talk to me about that. I'm way older than you, and I understand it. So, as an insurance professional, I know you've heard of a number of misconceptions about the insurance industry, and so we went I scoured
up all night,
and prompted artificial intelligence. I'll be honest with you, and said, okay, what are the most common myths out there, or maybe not myths, or things that people ask questions about. And so we could do this myth busting segment. So I'm going to go through this list, and I want you to kind of go myth or busted. Gotcha. Or maybe somewhere in between.
Could be in between.
All right,
there's a lot of gray areas.
Yeah, there is. Okay, so here's the first one. My homeowners insurance covers everything.
That's definitely a myth.
Okay.
Definitely a myth.
All right.
So there are, ideally, the homeowners insurance companies, they try to package a homeowner's policy that captures and covers the vast majority of what you would experience as a homeowner. So whether it's fire, lightning, theft, vandalism, pipes bursting, things like that. There are always going to be some really hard exclusions that the insurance companies label out. So for the dwelling coverage, you'll typically know that flood is not going to be covered under a homeowner's policy.
How about earthquake?
Earthquake, you can endorse it on with certain companies. Not all companies carry an earthquake endorsement. And that one tends to come with like a 5% or a 10% deductible, 5 or 10% of your dwelling coverage. So if you have a $500,000 house and your deductible is 5%, you're going to have a $25,000 deductible. Did I do my math right? Yes. Yeah. Had to think about that one. But yeah, so you can pick up earthquake coverage with a lot of carriers. Again, not all of them carry it. Of course, intentional loss is not going to be covered. Mudslides and earth movement, that falls under earthquake, but mudslides would fall under flood. But then there's also, when you get to your personal property coverage, you end up most oftentimes, the standard policy that most carriers write in North Carolina reduces itself from being comprehensive perils like we get with the dwelling coverage, where everything's covered unless they say is excluded. Then it goes to, hey, you're covered for these 16. And there's occasionally 1 or 2 carriers that break it up into a 17th named peril, but they're all the same. But you've got coverage for these perils. There are some carriers that still write a policy that gives you comprehensive perils on the personal property, subject to those same exclusions that I spoke about.
But I think what you're saying here too is that you can add these coverages. You can add the earthquake coverage. You could add a flood.
A lot of times, yes. Those two, a lot of the times. The flood, yes, you can always pick up a flood policy, whether it's through FEMA, but we've also had the emergence of private sector that have come in. So Lloyd's of London has come in and they've purchased a company, or they're a partner in a company called Neptune Flood. So some of those policies can be picked up in addition to what you get through FEMA. Okay.
All right. Good. Okay. Myth busted. Kinda. I mean, we have
a conversation with your agent.
Yeah, have a conversation.
It's a good one.
And if your agent doesn't want to talk to you, talk to Bryce.
Yeah.
Here's number 2. My insurance should match my home's market value.
Market value, no. But replacement costs, yes. So the common example I'll give is if we have a house that somebody purchased here, let's say a 1,500 square foot home inside the belt line, the market value on that may be something like 700,000, or I may be pulling a number out of on my rear side. But you take that same home and you take it to, let's say, a smaller town in North Carolina, Burgaw, North Carolina. It may very well be worth $150,000 or $200,000. So if you're insuring it for the dwelling or for the market value, you're probably going to be sorely disappointed. Or you may not need to do it on the market value here in Raleigh, because so much of that is the land, it's the location that you're buying. So you just got to make sure that you've done a home evaluator to figure out how much it should cost, because it should cost the same to rebuild that house, or pretty close to the same, whether it's in Raleigh or it's in Burgaw. Minor, you may have to account for maybe like some travel and whatnot for contractors, but for the most part, about the same. So use that home evaluator that cuts through some of that not gray area, but vagueness. Okay.
So you bring up this 2 words, home evaluator. For those people who are not sure what that may be, because they're new homeowners and they don't know what that is, Talk to us a little about what a home evaluator is.
So when you buy a home, you're buying the house and you're buying the land.
Mm-hmm.
So that's what makes up that market value of the home. But you're also, when you look at the house itself, you need to make sure that the insurance companies looked at the number of square feet, your square footage. And we've got tools for that. And, if you take a look, you'll see here the various categories that they'll go through in these home evaluators.
I wish we could have put that on screen. Right?
Oh man. But you'll see, the percentage of the exterior that's brick or fiber cement or vinyl siding, how much of your flooring is hardwood, how tall the ceilings are. Do you have chair rail and wainscoting? Do you have crown molding? How nice is your kitchen? Is it a designer kitchen or is it a builder's grade? So all those things go into figuring out how much it's going to cost to rebuild your home.
Yes. So if you're like me, who has specific things in his kitchen,
right,
that needs to be evaluated in, because I want to replace those so that I can have the same kitchen I usually work out of.
Correct. And when you bought the house 10 years later, it's not necessarily the same house. You may have remodeled.
Because I remodeled.
Yeah. So if you have not brought up those items or that remodeling to your insurance agent, you may very well be underinsured. Going through and making sure that the insurance agent hasn't just chosen to insure your house for the purchase price minus the land. Make sure that they can reproduce a home evaluator to tell you how they came up with the figure that you are responsible for yourself, because you as the homeowner, you're going to be the one that bears the financial burden if it's underinsured.
Right.
Because the insurance company will pay up to the limits of the policy. In most instances, a little bit above, as long as you have expanded replacement costs, which most people do.
Yeah.
But it is up to the homeowner to make sure that their house is insured properly. And so if your insurance agent cannot produce a home evaluator and show you how they came up with that number, ask them, hey, I think we need to go through a home evaluator and make sure I'm insured properly.
Oh, that's really good. That's really good. Okay, here's the next one.
Yeah.
All my personal belongings are covered.
With certain limitations for certain items.
So it's but no.
So it's but no. So the homeowner's policy, like I said, they package it to make sure most stuff that a homeowner is going to need is covered under that homeowner's policy. So let's say we have a house that's insured for $300,000.
Right.
Generally, your personal property coverage in the way it's always been it was set at 70% of that dwelling coverage. So you'd get $210,000. Nowadays, the insurance companies have allowed us to lower it because most people don't need the overwhelming amount of personal property that provides.
Right.
But in that, it's supposed to cover everything that you bring into the house after you purchase it. Essentially, if you could pick up the house and shake it, everything that would fall out is the common kind of illustration that people try to give. But there are limitations for jewelry, guns, coin collection, gold, things like that. So my common broad brush statement is, hey, if you can replace in the next 2 weeks from an Amazon, Kohl's, Best Buy, Sears, or some place retail,
general
outfit,
retail,
then you're fine. 80-inch TV that you bought this year and it's brand new and you spend $10,000 on it, you're fine. That's a pretty common item. But if you have a diamond ring or a piece of art that has an appraised value, and let's go for the art. If that burns up in a fire, if it wasn't scheduled on and you hadn't established the amount of coverage or the value of it prior and paid for the additional coverage to that appraised value, they're going to give you what it costs for the frame, the paper, and the paint. They are not paying you for the value of what you could sell it for and the appraised value.
Right.
That's on the homeowner to make sure that they've established that with an appraisal and scheduled on. So if you've got items in your house that have an appraised value, then let's have some conversation.
Okay. Art's a big one. I have friends who have got amazing artwork. And
it's crazy how inexpensive it is to insure art.
Okay.
So, I think the biggest obstacle with art is just finding somebody to do the appraisal and taking it to them and making yourself be deliberate in tackling that item.
Okay. What about, the sportsmen hunters who have, their guns or whatever, gun collection or whatever.
So depending on the policy that you get, because in North Carolina, there's the main policy is an HO3 policy. And in the HO3 policy, the limitation on the policy is $2,500 for guns.
Okay.
Some of our companies write what's called an HE7 policy, which actually increases that limit and those special limitations on the policy. So for guns, there's $10,000 of coverage.
Okay.
So it does vary from policy to policy. But if you don't have them scheduled on, it's still subject to your deductible. So if you have a $2,500 limit for guns and you have a $2,500 deductible, essentially, if that's the only item that's stolen from your home, you're going to feel like there's no coverage.
Right. Gotcha.
Well, technically there's coverage, but your deductible was too high, or not too high, but it was high to the point where it negated the coverage.
Negated coverage.
So talk to your agent.
That's really good advice. I like that. All these these are great. Okay. So here's the next one.
Yeah.
We hear evidently, according to the
word on the street.
A word on the artificial intelligence street. All my I just did that one, didn't I? Any accident on my property is fully covered.
So as long as it is an accident, you have a certain amount of coverage. And what I'm hearing from the question is from a liability concern. That's where my mind goes. So if somebody slips and falls on your property, and let's say you have frayed carpet at the top of your stairs, they trip over it, they fall down the stairs, you're covered for that in two ways. You've got medical payment coverage, which is kind of the please don't sue me type gesture. Let me take care of your emergency room bills. And then you've got, same situation, if they get an attorney, then all of a sudden it turns into a lawsuit. That's your personal liability coverage.
Okay.
So that's where, and me personally, on every policy I write, I try to make sure we've maximized the personal liability coverage, because going from the standard $300,000 to $1 million in coverage typically only adds $8 a year.
Oh, wow.
So it's so small, but if you ever need to use it, that is going to be the best peace of mind money that you've spent.
Right.
To have that maximized. So I'm a huge fan of liability coverage.
Right.
But in those situations where somebody gets hurt, accidents, those are covered. Okay. But intentional loss. So if it looked negligent, or that you intentionally did it, that's not going to be covered.
Okay.
Yeah.
So if you have if you've known that you've had the loose brick on your step,
correct, and it's been pointed out,
over and over and over again, and somebody hits it and they fall and break their leg, may not be.
It's possible. Just keep up with the maintenance of your house.
Ultimately. Okay. Yeah, that's good. I think you covered this, but we're going to go through it anyway, just because there's people who want to have specifically on it. Here's the next one. Flood damage is covered automatically.
No, you've got to have a flood policy for that.
Okay.
And a flood policy is pretty easy to get quoted out nowadays. The misnomer is that I'm not in a flood zone.
Right. That's the next.
That's a huge misnomer. So
myth. I'm not in a flood zone. I don't need it.
Everyone's in a flood zone. It's just whether or not everybody's hung up on whether or not I'm in the 100-year floodplain. So if you're inside the 100-year floodplain, typically the mortgage company, if you have a mortgage, they're going to require you to carry flood insurance.
Right.
If you're not in that 100-year floodplain, doesn't mean that you're not going to experience a flood.
With the point of being, it's a 100-year floodplain, meaning that
in the next 100 years, statistically, it's not supposed to happen.
Yeah, right.
Or you've got 1% chance or something like that.
Right. Yeah, it's small.
Yeah, very small. But once you, but if you're right beside it, and these flood zones, they change. They really do. So there's parts in North Raleigh that were never flood zones, but all of a sudden, because of some of the construction, now they're in a flood zone. Yeah,
and I think you said something earlier that said that really kind of caught me, and that is, mudslides. We don't think of a mudslide as being a problem, but with all the construction that we have, houses being built on hills, and we do have some hills in Raleigh, right? And of course, up in the mountains, they do, especially. We're not thinking about mudsliding. It's not something we think of, but that's part of the flood. Is that part of the flood insurance, or is it a separate addendum?
No, that's part of the flood, because what it was an inundation of water.
Okay.
Which moved the earth. And it came from ground movement and the water, how it affected the ground.
Right, which would make me think that even if you don't think that you're in this 100-year floodplain, right? And maybe you live on a hill or maybe a steep hill, And we have been known to get some pretty torrential rains here. And trees just, I mean, like it wasn't very long ago. We had a bunch of rain and a little bit of wind came and knocked down a, 80-foot tree.
Yep.
Because the roots got soaked, got saturated. There's no reason that can't happen to a home.
Correct. Now, in that instance, if the tree fell on the house, that's covered by the homeowner's insurance. But if there's the movement of the earth, sliding into the home and whatnot, that's gonna be
okay. Yeah. So flood insurance, even if you don't think you need it, it may be something that you want to take a look at and maybe take seriously.
Correct.
Okay. Great. We kind of talked about this, but maybe dig into this a little bit. Insurance will rebuild my home exactly as it was.
So that is where, with insurance, it's for indemnification. It's supposed to bring you to the point where you were prior to the claim, no more, no less.
Mm-hmm.
So it's designed to do that. But if there have been changes to the home and the insurance company hasn't been notified and you haven't updated your policy in 20 years for any changes you've made, that could be an issue. But every year your policy dwelling coverage is going to increase.
Mm-hmm.
There's a provision in the policy called inflation guard protection. So most years it's typically like 2 or 3% to try to make sure we've kept up with the cost of materials. In some years, like we'd spoken prior, like in 2022, I think we saw a much bigger jump than we did the prior years. With the pandemic, supply chains got interrupted. I think a lot of the insurance companies were hesitant to move and jump all over things because we were under the guise of it's going to return back once everything gets figured out. Not everything came back. So 2 years later, they finally did a bigger adjustment, and a lot of our insurance companies saw about a 12% increase in materials just to keep up and make sure that your house is still insured to value. It's the key thing, is insuring it to value. But if you've made changes to the home, make sure you've made the insurance agent aware so that they can make adjustments to the amount of coverage that you've got. Because as long as you're insured to value, that policy should act accordingly. Now, there's one other item, which is expanded replacement cost versus guaranteed replacement cost. Most homeowners policies in North Carolina have expanded replacement cost coverage. So if you insure a house for $400,000, typically the provision is 25%. So I've seen some companies go up to 50% above the dwelling coverage. So there's an additional 25%. So on a $400,000 home, there's an extra $100,000 to help rebuild the house in case materials were more expensive. Let's say we have a hurricane that comes through and so many homes are damaged at the same time that there's an impact on the cost of materials and the cost of labor. In that scenario, it's going to cost more to rebuild your house. So that's when you lean on that provision of that extra 25% to help rebuild the house.
Got it.
Some companies, and you can find them out, they offer guaranteed replacement cost coverage, where as long as we had the house insured to value prior to the loss, there is no limit to what they'll pay. So if it took 600 or 700, 800,000 to rebuild the home, that's what they'll pay. So the ideal thing is to have a guaranteed replacement cost coverage policy. Those are sometimes more expensive. And, so we've been offering both of those nowadays. We've had some rate increases. And so the delta between those two policies and the pricing of it, I try to show it more oftentimes, the standard policy and the enhanced one, so that they can choose for themselves, because there could be a $200 difference. And some people very much want to have that guaranteed replacement and they pay the extra $200.
So it really is, it depends on what your cost is of peace of mind.
Correct.
Really is what we're saying here, because if you want total peace of mind, you're going to go guaranteed.
Yes. 100%.
And if you're kind of going, based on it, I don't need.
If you're a numbers guy.
And you're calculating that you're doing the analytics. Go, okay, well, if it's 400,000, if this happens, if I had an extra 100,000 at 25%, I think I get That's where the left brain, right brain thing starts to happen here.
And occasionally, sometimes people find themselves regretting in the end, find themselves penny wise, pound foolish. An old adage. An old adage comes out of Bryce. That's pretty awesome. Old soul.
Old soul. Yes, you are. Although you look 12. All right. So next one. if I miss a payment, my coverage is over immediately.
Depends on the carrier.
Oh,
I really hate to say it that way. We definitely have some companies that will continue to let the policy go for probably another 45 to 60 days.
Okay.
Because they're a lot more forgiving with the billing. And then we've got some that will cut it off within like 15 days.
Okay.
If they don't receive a payment.
Okay.
And so it does vary from carrier to carrier. The biggest thing is just make sure if you've done any kind of refinance, that your homeowner's policy reflects the new mortgage company if they handle the billing. So if they're supposed to pay your homeowner's insurance because they collect escrow every month, and that homeowner's insurance or that mortgage company has changed, if the homeowner's insurance policy hasn't been updated, they're sending that invoice to the old company, to the old mortgage company.
Got it.
So sometimes there's some communication that will always occur between the mortgage companies and the insurance company, but occasionally the ball does get dropped. And so just make sure that if you've refinanced, call your insurance agent to make sure that they have the new insurance company on, or the new mortgage company on file, so they can send the bill to the right place.
And you sound like this has happened.
Oh, yes. Yes.
Okay.
Because some mortgage companies will send that information directly to the insurance company.
Right.
And the insurance company then has to send it to us.
Right.
And then we'll make the change. But there's oftentimes a time delay in those scenarios.
Okay.
And, like I said, sometimes balls get dropped. If something is touching 5 people's hands or going through 2 or 3 different systems, something could go awry. So,
it's never intentional, but it can just happen.
Ultimately, it falls on you, the homeowner, because you're the one that needs to make sure that you've double checked, because ultimately this is your investment, your home.
Right.
You just need to make sure that you've taken the extra time to double check.
Okay. Let's do number 9. If I file a claim, my rates will skyrocket.
I don't want to use the word skyrocket. There are definitely different amounts of change in the premium, because nowadays that is the norm now. It used to be that you file a claim, you weren't seeing, it wasn't like the auto insurance. Auto insurance, when you have a claim, there's a point system. Right. And there's that increase.
Oh, I know. When I was young,
your dad
foolish,
never let it go.
My young, foolish driver. Yes.
Yeah. Your dad made sure you knew, son, our rates went up because of you. You can't keep doing this. Yeah. Stop. When you're a we as a.
Right. Stop putting your foot on the gas pedal.
Right.
Yeah.
On the homeowner side of things, it really feels like the last 10 to 12 years that we started seeing surcharges getting put on policies for claims. So some companies that we've got have the ability for us to put in what the claim is going to be and the predictive dollar amount of the claim. And it'll tell us approximately how much the rate will go up. All that goes out the window with a rate increase tied into it as well. Right. Okay. Because some of that will feel like it's sheer punishment. But I hate to say nowadays, rates will definitely change when you have claims.
Okay, good. All right, here's the last one. Older homes cannot be fully insured.
Older homes, there are certain companies that don't like older homes.
Okay.
So as long as you have maintained that home and kind of kept up with code, made sure that there's no aluminum wiring in the house, updated the plumbing at some point, and the roof has been replaced, most companies will have no problem. We've gone through this very tightening of the underwriting guidelines for some homeowners insurance companies. Right. And so some reacted a little bit more than others. Right. Some said, hey, we can't write a roof more than 5 years old for any new business. And that company has now adjusted back to 15. Okay. But if not every company is the same, but for the most part, as long as you've kept up with the home maintenance and you've kept the house up to code, you've updated the HVAC, the wiring, and the roof, you should be fine. Okay. There's going to be a company that will write it.
So I know this is isn't on the list, but I've just popped it up in my head, and so I'm going to put this on a T for you. Okay. So here it is. Once I have a policy, I should never review it ever again with my insurance agent.
I appreciate the T. Yeah. So easy one. Yeah, I would definitely review it every 2 or 3 years. It doesn't have to be yearly. If you've
Right.
done nothing to the house,
Right.
your policy, there will be an increase in the premium,
Right.
not just the premium, but the dwelling coverage is what I meant to say. Like I said before, I'm pessimistic. I think there will probably be an increase in the premium next year too.
Okay.
That's just, I've seen way too many rate increases, but,
Right.
have conversations with them. If you've changed anything in the house, if you've if you've gotten engaged,
Right.
or if you've picked up more jewelry, that stuff's not automatically covered. So talk to your agent.
Okay. Well, let me throw this one at you.
Okay.
Okay. This might be teed up for you too.
I hope it is.
Okay. You know what? If your insurance agent doesn't have time to review, I don't have time, as Bryce Williams, I don't have the time to review your policy from another company either. Myth.
I would love to make sure. I don't like to speak for other insurance agents. I want to make sure I'm hearing your question right.
Let me rephrase it.
Yeah.
And you're happy to review somebody's policy.
100%. Yes, 100%. Right now my priority. So right now our priority with the rate increases that we're seeing this year, it's much bigger than we've seen in previous years. So
Right.
we are proactively calling every single client to make sure we've got the updated age of roof, and we've looked at deductible options. So I hate to say right now, my priority is getting to my clients, my existing clients, to make sure that they're taken care of. And then we are absolutely taking on new business as well. But it takes me just a little bit longer. I used to always try to have a quote out within 4 hours. Within a day, I'll have a quote out nowadays. My timeline is pushed. But yes, 100%.
You would still can review. You'd be happy to review a policy with people and go over and ensure that they have the right coverage. Avoid some of these myths.
Correct.
You'd be happy to do that.
100%. And one thing I would say is, if you're calling up an insurance agent to get a quote, make sure you have your policy in front of you, and oftentimes send over a copy of that policy.
Okay.
It's a misnomer that, and we'll receive copies, and that's fine, where people will redact the premiums, or they'll strike through to make sure there's no shenanigans.
Right.
I hate to say, it's so regulated that there's no shenanigans. I put in the coverage, and whatever the insurance company says the rate is, I have no influence on that.
Right.
So it does bring me peace of mind to see what your premiums are, because I know whether or not, what we're presenting makes sense to have emphasized and whatnot. But send over a copy, because there's endorsements on your current policy that you want to make sure that the other insurance agent has quoted out for you as well. So you're not losing coverage. And then you can talk about whether or not you want to keep those endorsements, but make sure they see what's on your existing policy, so that you keep your water sewer backup coverage, or you keep your scheduled jewelry. Because if he didn't ask, or she didn't ask if there's jewelry on your policy, and you didn't bring it up, well, when that policy gets written, all of a sudden you don't have jewelry coverage. So when you look and you shop the policy, make sure to have a copy of your policy. And if you can throw it over to the agent to double check for you, that's key for us.
Yeah. And I think the thing that's so unique about you is that you represent a lot of different insurance companies.
Correct.
And so you can show people comparisons of what this company is doing versus another company.
Correct.
And so
100%,
because you represent them. So, by the way, this has been great. Thank you.
Oh, no problem.
This has been a lot of fun. I hope you've had a lot of fun with it, because I've certainly have a lot of fun and very informative. People want to get a hold of you and say, hey, I need help reviewing the policy. How do they get a hold of you?
So we're here in Raleigh, but obviously our phone number works everywhere in North Carolina. It's 919-342-9732.
So there's a thing about in radio and TV that you're supposed to say the multiple times. So we need one more time of the phone number.
Right, so I'll do it with a rhythm. 919-342-9732.
Okay.
So everybody seems to give a jingle.
He's got his own jingle. And how great is that? Thanks, Bryce. This has been a lot of fun. Hey, folks, this is a show. You had a lot of choices. You chose us. Thank you very much for doing that. We appreciate you here at Real Estate Right Now. Wherever you're listening to us, wherever you're watching us, give us a thumbs up on YouTube. Give us a positive review wherever you may be listening. And you know what? If you ever have suggestions of who we should bring on the show, you know what? Feel free to reach out to us. We'd be happy to chat with you as well. As I say to you all over the country, you know what that is? And that is ciao, every